So to be able to do a great job as an investor, you need to understand that, to just be a fraction over 50% is maybe that's what's going to determine how good you are investing. Is that the same when you do trades? Do you feel that, it's about being maybe 55% right at the time? And you have to be mentally adapt and don't really, think about trades you put on that didn't work and then, start from the beginning again? Or how does that dynamic work? Because investing is one of those industries that is a bit special in that sense. That is about how hard you press the winners and how fast you cut your losses.
I think it's a very interesting point. You could argue that if you're right 51% of the time, you're kind of adding value. Obviously, we are aiming much higher than that. But we did a count during the, not this quarterly season, but last quarterly season in February. And we counted we do a lot of short-term trading around the quarterly results, and we counted how our success rate. And I don't remember the exact number, but I believe it was in the 70s, 75%, something around there. And I think that reporting season was one of our less successful ones. So in terms of the short-term trading, we're quite successful, I would argue. And we have made a lot of money for our investors during those short trades. But our kind of main strategy, maybe we can get more into that later, but it's the more fundamental view, the longer term views. And I don't know if I could easily check, but I don't have the number in my head. But the success rate on those long-term investments, I would think is closer to the 70-75 mark than 90 or 50. So we do obviously have trades that are not going the right direction all the time. That's kind of the nature of managing a fund. We are not able to predict the future with 100% certainty, obviously not. But we do aim a lot higher than 50.
Yeah. But like you said, the returns have been highly successful for a long period of time. But if I understood the metrics correctly, the last couple of months last year were challenging in terms of the returns. I think it was October, November, December. Can you just explain how you handle those months? Is it just, new day, I forgot about the losses and keep doing the same? Or is it at some point a bit mentally challenging to have those months? That will come eventually, whatever you do, right?
Yeah, you cannot manage a fund without having drawdowns once in a while. But it's a lot I could say about that period. It was an interesting period. I would say that one positive thing during that period was that our investor base is very stable. So we had only one or two redemptions, and I think only one of them were because of the drawdown. The other one was a real estate development project. But it does something with the feeling at the office. Obviously, when you're losing, one thing is to lose money one day and you make money another day, and it does something with your feelings. But you have to it's a natural part of the business. But during October, I think we had a big drawdown. So you lose money basically every day you get into the office. I think it was up towards 1 percentage point each day, and that's extremely exhausting. But what we do in those events is we have a mathematical approach to our investments. So we find a big comfort in kind of going through all our models. Is there something we have overlooked? Has the fundamentals changed? But what we kind of landed on, we saw that fundamentals were basically the same. Pricing were down. So after a while, we started buying. And we bought. We transitioned from kind of reduced our shorts and bought more longs. And I remember just before Christmas, we kind of went all in because we were having some discussions, talking to people, and one impression we had that it was maybe a liquidity event. Some big US generalists, or maybe several, wanted to divest their positions ahead of financial year end. Just because they didn't like Trump, they didn't like the headlines on trade war and tariffs, so they just wanted to get it out of their balance sheet before year end. So And also pricing were just ridiculously attractive. So we even bought dry bulk, which you usually don't do in December because of the seasonality. It usually collapses into January. But we bought basically a lot. Oil tankers, dry bulk, we had a lot of other positions. And that was, January was our best month on record. So that's kind of what we do, we rely on the math. We see through sentiment, and we employ capital in a rational way, but we do feel the hurt going down. We are ourselves invested in the fund, so it's and we feel a large responsibility for all our investors. So yeah.
So to summarize, it's a bit about being greedy while others are fearful, or pulling out of a position, or.
Yeah, it's the famous saying, being greedy when others are fearful. But it's about the mathematics, it's about the fundamentals, and it's about pricing. So if you see pricing as attractive and the risk reward is attractive, you do the rational thing and you employ capital. And in my experience, that usually gets you the high returns we have delivered historically.